Is the Fed maybe getting a little ahead of itself? I mean, do you really expect another couple of rate rises this year and then continued increases in 2018?
Yes, I think it's been pretty clear from Fed communication, the minutes in particular, and Fed speakers that we've just been listening to, that the data overall has been decent enough for the Fed to continue normalizing its monetary stance. I think the key question is not so much about June, because we've seen the market repricing subsequent rate hikes. After June, what happens with inflation in particular, what happens with GDP growth, obviously, after the first quarter, and the weakness we've seen in various sectors. What happens also with the broader strategy in terms of the balance sheet. This is in the very early stages at the moment. So my feeling is that the market will focus on the communication after the hike, if there is a hike in June, and very likely reprice the scenario and the yield curve looking ahead looking forward to the second half of this year.
Mm-hmm. Frederik, on that yield curve then, obviously we've been seeing it flatten over the past few months. Do you expect that to change, and what's going to drive it? Is it going to be the balance sheet unwind? Is it going to be inflation expectations picking up?
To be fair, we've seen the market reacting very I think moderately to the issue of the balance sheet. Indeed, the Fed is likely to start with a very small and small-scale pace of balance sheet reduction. That's pretty clear. But to me, it's all about inflation, really, in terms of the slope, at least, of the yield curve, in terms of the term premium and the term structure. Because we've got now two consecutive months of CPI reports very much below the Fed expectations, and that has to lead to a broader repricing. Whether it's a temporary factor, as the Fed believes, or something new, maybe also in terms of measurement issues. We've seen how such a small change in the telecommunications prices, in that case, has led to a quite significant influence on the broader CPI index. Whether it's about the unemployment rate and the output gap, that has to be settled in the next few months.
Shaun, let me ask you about, I mean, if we assume that the Fed is going to continue on the path that the market expects, and the ECB is just really having trouble getting inflation to reach or stick to 2%, why isn't the dollar worth more against the euro?
Good question. We think it's a little bit rich here, the euro that is, and we'd rather see or rather expect the euro to drift back a little bit more in the course of the next few weeks. I think the ECB certainly has a challenge ahead of it. I think a higher euro, we can see historically, generally tends to correlate quite strongly, or the euro's value rather tends to correlate quite strongly with inflation expectations in the eurozone, and we can see that the recent rebound in the currency has coincided with a bit of a drift off in inflation expectations in the eurozone. In fact, we're not too far off in terms of the five-year forward now, where we were when the ECB started its more aggressive QE process. So I think talk about an early exit from the QE process in the eurozone is premature at this point, and I think Draghi is likely to stress that this morning when we hear the comments that he makes before the European Parliament.